Bitcoin does not have much time left at all, and we're going to go through why. So first of all, obviously we can see that Bitcoin is breaking down. We're going to talk about the government shutdown, which is now at 75% likelihood to happen on end of the week on Saturday. We're also going to talk about the S&P looking a bit more bearish. Looks like we're going to go down from here. We're going to also talk about the CME gap, because we have formed a new CME gap over the weekend, which gives us a bit more hope. And finally, we're going to talk about the total crypto market cap and how we're at crucial support here before we might go down. So first of all, let's talk about the government shutdown. We've jumped from about a 10% probability of a government shutdown to now an almost 75% probability. And basically we had massive government shutdown last year in 2025 between October and November, where a lot of government employees in the US were not paid their wages and they were asked to leave. And the reason was that the Republicans and the Democrats, they were not in alignment on the funding. And now what happened last week, a few days ago in Minnesota, we had another disagreement. We had a guy being fatally shot, right? And now they are not in agreement on how much funding should go to Homeland Security. So as long as the Democrats and Republicans are not in alignment, we might go into another government shutdown. And this is of course not good at all for risk on assets such as Bitcoin. Now, if we go to Bitcoin, we can see that it looks like we are breaking down from this massive bear flag, and you can see here is the bear flag. So this just means we go down, then we trade sideways and we create the flag. You can see the flag pattern, and usually this is a bearish pattern, which means we could continue going down. Now usually it's a good time to short this, but however we do have a CME gap, right? A CME gap is formed over the weekend because Bitcoin trades 7 days a week and regular assets, they trade 5 days a week. The price difference that is formed over the weekend is the CME gap. And we can see here on Friday, this is the chart on Friday, Bitcoin closed at $89,500 approximately, $89,300. And now we are at $87,500. So there's about a $2,000 difference in price, which we are most likely going to be filling over the next couple of days. As we know, CME gaps get filled about 95% of the time. And we have two CME gaps now. We have this one, which we formed this weekend, which is right here at around $89,300. And we have the one from last week, which is at $92,000, $93,000. And that gives me hope that we are still going to go higher and fill these CME gaps first. Now, what I think will happen next is, first of all, before breaking down, if we didn't have the CME gaps, I definitely think we'd be breaking down along with the other patterns that we're seeing. But we'd have the CME gap. There's one here. There's one at, what did we say? There's one here at 89,000, right? 89,000 is here. So it just brings us back into the pattern. And then we have another one at 93,000 right here, right from last week. Additionally, we also have the 200 simple moving average. This white line is just giving us the average price over the last 200 days. And historically, we always retest that line. If I zoom out a bit and go to the last cycle, we can see that we've retested that line in the last cycle. And that is right here. So we had a similar pattern. We broke down and then we retested that line before continuing to go down for a substantial amount of time. And that is then the bear market. So we've obviously started the bear market, but we have not yet dropped drastically. We've had a good drop here of 30%. We've recovered a bit, but I definitely think we're going to keep going down. So keep your eyes out for going back to 93,000 to fill both CME gaps. And then I think a good time to start shorting or to take the last profits is anywhere in the range of 93,000, which is the top range CME gap, and 105,000, which is where the 200 simple moving average is right now. So anywhere between this area, between this area is where I think we're gonna then start seeing a reversal and continue to go down. Now the S&P 500 is also not looking that good. We can see it is right now breaking out of the rising wedge pattern, which, as we know, usually is a bearish pattern. And if there's a government shutdown, we might see a fall from here. As we can see, we're just rebouncing it from the bottom side, which usually is not that good. If we broke out, then this usually means we're going down. Let's see what happens then by end of the week. And the last thing to talk about is the total crypto market cap. So let's focus on the chart on the top side here. And this just shows us the total market cap of all coins, right? All cryptocurrencies. And what we can see is that since around September 2023, we've been in an uptrend. Obviously, that's the last bull market that we've been in. And we have a crucial support line, the yellow line that I drew here. And we can see that we bounced from here once and we went up. We bounced another time and we went up. But now we are retesting that line and we do not seem to manage to stay above it. And the more often we retest a certain line, the higher the probability that we're gonna break below it, as we are basically failing to get support from that line. And what we can see right now is we have many retests, and it looks like we are finally going down along with a bearish divergence. This is the RSI here, and the RSI is showing less buying pressure, lower strength in the market, and usually it is a leading indicator for the price. So it shows that we are losing relative strength in the market, relative buying pressure, and this will eventually reflect on the price, and the price will go down. So for now, that's why I said we don't have much time left at all, because of all these different things. The total crypto market is going down. We have the S&P not doing that good, the government shut down, and therefore the only thing left for hope is the CME gaps, retesting the 200 simple moving average, taking your profits between 93 to 105,000, and then we have to wait for quite a while before we can buy again. In around 6 months, I'd say, we can then start buying again for the next bull market. Hope you guys liked it. See you next time. Bye.